Hello, and welcome to the first episode of Optimum TV, in which we'll be bringing you the latest insights from the world of life science investment. My name is Stephen Adams, and I'm from Optimum Strategic Communications. And today I'm joined by Eva Haas, also of Optimum Strategic Communications, and we'll be examining the question, has spring finally sprung for biotech markets? Eva is a former healthcare equities analyst at Schroders. So, Eva, welcome.
Hi, Stephen. Hello, everyone else.
So, Eva, is the situation for biotech companies better than it was 6 or 12 months ago? And if so, why?
I think it definitely is. Performance of broader markets has improved, especially in Q4, a little bit less so in Q1, although still up kind of 10%. Q1's been a bit slower. I think we can look forward to some ups and downs as we generally get with stock markets. And biotechs have seen, mostly looking at the US, some activity. There's been about 6 IPOs to date and another 6 in the pipe. Those 6 that have IPO'd, about half of those are still above the IPO value, and the others have kind of held water. So things are looking good there.
So the fact that there is some IPO activity is a good signal?
Definitely, it gives investors as a whole, particularly on the venture side, some sort of view that there is an exit possible there. It's no longer just a mirage. So it's very encouraging, and it's encouraging investment further down the pipe in earlier companies as well.
Okay, and what about mergers and acquisitions? Is there an increase in activity there too?
Definitely. We saw an increase in the latter part of Q4 and going into JP Morgan, and even since then. AstraZeneca's just announced 2 large acquisitions in rare diseases and radio pharma, and just this morning, Novo announced the acquisition of Cardior, which is in heart failure, disease-modifying treatment for heart failure. So that's all pretty exciting, and those tickets were, well above $1 billion.
Big tickets?
Yeah.
So if we're thinking about biotech, of course, lots of biotech companies are not publicly listed. They're relatively small. They're private companies. And over the last couple of years, since late 2021, they've found it pretty tough to access more financing. Are they now finding it easier, or is it still winter out there for private biotechs?
I think things have eased up and are warming up nicely. I've just read an Endpoints article where there were year-to-date 21 financing rounds above 100 million, well over 100 million in some cases, up to sort of 400 million or so. So that's looking very encouraging. And that's been across the board, actually, surprisingly. From preclinical all the way up to phase 3. There is a focus more on sort of later stage companies, to be fair. And it's there where the average fundraise is well above 100 million. And this is on the private side. I'm not talking IPOs. And then the other sort of hot point is companies that are in phase 1. But preclinical and phase 2 have seen good sized rounds as well, on average, certainly in the sort of $40 to $60 million range.
So there is an increase in fundraising across the whole spectrum, you think?
Yeah, I think the structural side of things, where a lot of the funds raised money in the last couple of years, there's still a lot of money to deploy. I've seen a figure of just under $40 billion of dry powder out there. So that has to go somewhere. They can't sit on it forever.
Of course, investors don't just give their money away. They need a good reason to invest. What do private companies in particular have to do to show that they're worthy of investment?
Well, I think if they're going into some sort of financing event or an inflection point, preparation is key. So well in advance. Far too many companies do it sort of last minute, and preparation definitely helps. Differentiation and having a sort of plan and a pathway to value creation, even if that's not necessarily to an exit, specifically, proof of concept data, etc., so that investors can see where they're going to make the money and how they can measure the progress. And all of that wrapped up in a nice, concise, compelling story. Obviously, we can help with that.
You've got to tell your story.
Absolutely.
And by differentiation, you mean making sure that it's clear to the investor how you are different from your competitors, what your unique selling proposition is.
Yes, that, and also the context of the market, so that you have knowledge of where you're going to sit going forward, and what new groundbreaking changes you're going to bring to patients. They are, after all, what we're all working towards.
Okay. And you don't have a crystal ball. I don't have a crystal ball. But casting ahead to the rest of 2024, how do you see markets developing? Do you think we're on an optimistic trajectory? Could a spanner be thrown in the works?
There's always the possibility of a spanner in the works. And I've seen screaming headlines of, if we continue the rate of financing, we're going to equal the heights in sort of 2020, 21. That's if Q1 continues. I think we're more likely to see ups and downs. The market is always forward looking and has already anticipated sort of interest rates easing somewhat. And that has been signaled to be less fast than hoped for more recently. So I think there will be pauses for sort of consolidation of value and performance. But overall, I'm pretty optimistic, and I'm a sort of pretty miserable person who's quite pessimistic. So that's a good thing.
Well, I mean, it's very good that we've got a generally optimistic picture, certainly much more so than the last couple of years. Wouldn't you agree?
Absolutely. It was doom and gloom then, and now spring is very much sprung.
Fantastic. Thank you very much indeed for your thoughts, Eva, and thank you for watching. We'll see you next time. Bye-bye.
Bye-bye. Thanks.